So really, how easy is it to make $1,000 on the day trading the NASDAQ futures? Okay, because that's primarily what I'm trading now these days. It's fairly simple, I'll say this, because really you need to only pick up about 25 points, and that's trading 2 contracts, E-minis, okay? So for anyone out there who's looking to make about $1,000 each day, okay, I'm going to show you just a very simple strategy. Nothing too complex, okay? If you really go back and you understand and back test and forward test and stuff, you'll start to see how things kind of come together. The key to it all is market structure, being able to read and identify structural points where the market is breaking structure. And you want to tend to take trades in the direction of whatever your higher base chart you're using. For me, I'm using a 120 range chart, so I trade range based charts. And I'm looking for multi-chart confluence. So I'm looking for where I have, first of all, structure being broken to the upside if we're bullish. And I trade supply and demand, so I'm looking for pullbacks to key areas of demand, aggressive areas in the market where the market pushed higher. So when I found a safe zone to where I can actually mark up on my charts as a demand zone on my higher base chart to start with, meaning I want to see if the market is making higher highs and higher lows to the upside. And as long as we're making that movement, I can mark areas of demands. Okay, so if the market is making highs, higher lows, breaking structure, push up, make a new high, pulling back, breaking structure, I can mark areas of demand like here and here and here because it pushed up, pulled back, and broke structure higher. So the key is overall understanding the flow of the market. What is structure doing? And if you can find, once the market has broken an area of structure, a beautiful or key area of demand, like right here, aggressive buying, where there's an imbalance resting back at the zone, okay, or a gap, that's going to make that zone high probability. Now, the strategy is not over, but you've pretty much finalized the first part or steps of the strategy, okay, the strategy, okay? So identifying structure is imperative. Higher highs, higher lows. We're bullish, right? So we're trending to the upside. So look to take pullbacks going long to key areas of demand. Now, I don't trade break and retest like you have a push up here, pull back, break higher, come back, test this area of support, then the market pushes higher. If you trade that, that's fine. But I'm all about getting into the trade where the market started its move from the latter part of the swing, okay? Meaning inside the swing at some point where there's another little small swing that broke the structure, area of structure to the upside, where there's a leaving behind an aggressive area of demand. Lots of buying came out of that area. So right here, pushed up, pulled back, broke higher, lots of buying, high probability there's an imbalance or gap on the zone. If you don't know what I'm talking about the gap or imbalance, please watch some of the videos on the channel. You can go to the home page. You can type in the search tool, little magnifying glass, and enter in gaps, imbalances, and it will bring up video content surrounding what I'm talking about there. Because that's a very, very imperative and critical piece to the overall strategy. The last part of the strategy is just really breaking down, fine-tuning it by finding a smaller zone, meaning another demand zone, but on a lower base chart, resting on the inside of one of our larger boxes from the 120 range zone. So we're going to mark up the first demand zone on the 120 range chart, and then the second one is going to be marked up on the 24 range. That's giving us our multi-chart confluence, all right? Yes, we have to wait and be disciplined and be patient for these things to unfold. You may get one setup a day, 2 setup a days. You may get multiple. It just depends, okay? But that's why I always look at other markets as well. Like I have gold up on a different monitor. I'm also looking at the ES. So, I like to look at the indices and maybe some means of a commodity like gold. So that's going to give me the opportunity, definitely on a daily basis, to take a trade or two. And that's pretty much my cap that I'm looking to, the number of entries I'm looking to take on the day is 1 or 2 times entering the market, okay? So, for example, I'm going to show you a quick reference right here, what I'm talking about when it comes to, say, for example, we're breaking higher, structure is to the upside, we're bullish, pull back, key area of demand right here, and then I'll be looking to go long around this area here, aggressive buying after a break of structure, mark the zone up. Now, if we go down to the lower base chart, I'm telling you guys, it's very simplistic, it's not complex. I'm just looking to see, is there a smaller zone of demand on the 24 range chart that's resting on the inside of this 120 range chart zone, demand zone, okay? And right here there is, okay? So I'm on my 24 range. The market's retracing. The larger box is the 120 range demand zone. And right here, there is a demand zone resting on the inside right there. Okay. So when the market gets there, I'm looking to take a trade. Now, roughly all you need is about 25 points a day to make $1,000 trade the NASDAQ on 2 contracts on the E-minis. Now, once the market reacts at this area here, I'm going to get in aggressive, nor me, at 229, and then taking out somewhere in this area up here because we got a small area of structure right here where there was supply resting right back up in this area here. So picking myself up roughly about, anywhere between 10, 12 points right there. But if I look back at my higher base chart, I see that the market, there's some gaps on these candles right here back to the upside. So the market could, if I got in at 229 down here, the market's more likely going to run back up here to test at least 262. That way you can hold the trade through. So maybe you got one contract on, or you take one contract out up in this area, and then let your last contract trail or move with the market trailing behind up to around that area. As you can see, the market reacted right here very nicely around that 260, 262 area. All right, back up there to that area, basically of supply resting right up in here. Okay, so this is a nice setup right here to go long. Again, you only need 25 points to make your $1,000 a day, and you can pick that up by making 12 to 13 points on 2 trades. All right, unless you can get the full on 25 right off the bat on the first shot on the your first trade, then you can be done for the day. I mean, really, if you're profitable and you have made a decent amount that day, shut shop, because all you're really looking to do in these markets is to compound your account. All right, and you can do that. Just picture $1,000 here each and every day, 5 days a week. Within 5 days, that's $5 grand, right? Or just say you're aiming for $500 a day. That's $2,500. That adds up. You're growing an account size very, very quickly here. Here's an example right here. The market comes down here. It tests this demand zone resting right here, right? All right. In this situation here, you can see the market reacts off of it and it pushes higher. But if you notice what's taking place right here, we got multiple areas of, well, I should say this, liquidity being built or taking place right here. So as that's being developed, areas of liquidity, you can see, yep, it reacted off of here. But if you look at you go down and look at your chart, there was really no zone on the 24 range on the inside where it tapped at. It reacted off the 120 and pushed back up to the upside. But when it did that, it was just basically going back up, making more areas of equal highs right here, resting right here. But then it comes back down. I'm going to show you right now. I believe this is around about 220. Let's go down to this area here. Right here, I believe it was. Yeah, there was a, let me get this right here. There was a demand zone resting down here at the bottom right here. So the market retested this area right here, okay? And at that point, it reacted here. And we got this area of liquidity resting up here at this top right here. Multiple areas. 1 try, 2 try, comes down, tests the zone here, goes back up. Another area where it's hitting the highs here. Another area where it's hitting the highs here. Another area where it's hitting the highs here. 1, 2, 3, 4, about 4 or 5 areas where liquidity is being basically stacked up in the market. It comes down here. It finally touches a zone on the inside of the 120, okay, range chart. All right, where there's a 24 range demand zone. Okay, so we got confluence there, higher base and lower base. And then if you notice what's above us here, now you can get into the trade from this area here. All right, and as you can see, it was a nice run to the downside here, aggressive selling to the downside. So you can almost bet the market's going to come back and fill all these candles going back up to these gaps in the market, okay? A lot of people call them fair value gaps, right? Back going to the upside, this is an area of structure being broken to the downside as well as below this area here. And there's a supply area right here. So it is more like it's going to test that area. But if you really pay close attention as well, the higher base chart is going to give you more insight in what you really need to do and where you can take a trade to, at least back up to say 140, right? Okay. But above us is this area of liquidity that is coming down and hitting an area of demand. So if it reacts there and we get rejection, more likely we can aim to take out these highs up here. I always talk about aiming for areas where gaps need to be filled back up to the upside. Maybe your first area is going to be taken out right here. And then allowing whatever remaining contracts you have on to take out areas above here. That's how you can hold and stay in the market longer, by aiming for areas of where gaps need to be filled in the market, imbalances, as well as where liquidity may be right above as well. Right here, there's a gap on this candle right here. Take it back up here, but there was also liquidity resting right here that it can more than likely want to come up and run to the upside. That's what the market is always trying to do, is aim to take out liquidity from one end to the next end. Once it grabs it from one end, it'll turn back around at some point and start seeking for or setting up new liquidity pools within the market. And so as an example, I'll show you like supply, another setup. Like this is a supply area right here. Okay, aggressive selling to the downside, took out a bit of structure, coming to the downside here. Pulls back. We're going to mark up the chart on the higher base chart, the 120 first, okay, 120 range chart. We're not trading directly from that chart, but when I scale down, I move down to my lower base chart. You can see there's actually two zones on the inside here. We have a zone resting right here and a zone resting right here. Now I got both of them marked up for a reason. Yeah, you could have taken a trade right here. But more likely you may have gotten chopped up and got stopped out, because by the time you enter the market here, it comes down, gives you a few points, and it comes back and takes you out. Why is that? I always talk about pay attention to what's right below you as the market is retracing back to your zone as far as price action. Okay, even if you look back at the higher base chart here, it was somewhere in this area, right? Right below you is a stopping point, meaning there's a little swing right here. Well, this is even on the higher base chart, but right here around 109 or 110, there's an area where the market could actually bounce at. There is support resting right there in a sense, okay? So I'll be more interested up here, back deeper inside the zone, inside the swing at the upper end of the swing. Upper end of the swing is up in this area here. Why? Let's bring this out a little bit. Because if you look at the higher base chart, it comes back, yep, taps its zone. But if I look at my lower base chart, there is a higher base zone resting higher up with more clearance, meaning nothing is below me until we get down here. If you see this right here, push up, pull back, push up, pull back, break higher, right? This last swing that made to the upside, it tapped into this supply area, okay, on the 24 range. So we're tapped into the higher base 120. This is the higher base 24 range supply zone, right? And below me, I got straight gaps coming back down to the downside. That's what I want to see, because I know these are areas that the market has to fill. And if I get the reaction or rejection at the 24 range zone, then I could take it comfortably all the way back down here to around about, 21,110, 109 area. And that's enough for me to be done for the day trading. So I'll get in here around about 130, 131, aggressive, more conservative around 126. So if I got in here at 131 or 132, take it on down to 110, that's enough. That's all you really need on the day to be, really be profitable and close shop for the day. I mean, shut the computer down. Okay. So I showed you both an example of demand and supply. Talk to you a little bit about how liquidity and how you can aim for areas of liquidity, meaning where to take your trade back to fill gaps coming back down, and then also maybe to some area, possible area of liquidity. It's simple, guys. It's not too complex, but you need to spend time watching the video content. But the biggest thing overall is understand and learn market structure, okay? And try to trade, or definitely trade, I should say, not try, for beginners in the direction of the higher base chart. All that means is whatever is going on the higher base chart, if we're bullish, then your trade should be looking bullish. You should be taking trades that are bullish, meaning going long just as well. You don't want to be counter trading if you don't have experience and don't know enough how to really do so. The best opportunities, the highest probabilities are going to come when you're trading in the direction of the higher base chart. Okay. Now, for anyone that wants to join the Discord, it is free. Okay. The link is down in the description portion of the video. I want to say this right now because, there are a lot of people out there or individuals that like to join free Discords. Okay. For the sole purpose of trying for their better half, okay, or try to spam or scam someone. I'll say that right now. So if you join the Discord, and I'm gonna tell you right now, I will never contact you directly in any kind of way. So keep that in mind, okay? It's right there at the beginning when you join the Discord. Within the announcement in the rules section, it says right at the top, I will never directly contact you in any way. Unless you contact me or DM me asking about a question or something, I'll respond back. So if you get a direct message for someone or a friend message from someone that is pretending to use my username, look very closely at the user profile that they're using, their name, okay? You're going to see some slight variation of a syntax, The lettering could be off. They may try to use extra letters or numbers, whatever the case is. You compare that to my actual administrative username, and you will actually see that the names don't match up, okay? So that means somebody's fictitiously or fraudulently trying to use my username, okay, within the Discord. So just block them and report them, okay? But again, the Discord is free to use. It's down in the description portion of the video. I appreciate everyone who's part of the community. If you want to get more insight, more information, you want to see similar trades that I actually take to where I break them down, I post my trades over in the Discord community, okay? And then I'll go back, not every single day, but most instances I'll try to go back and I'll break those trades down for the elite channel supporters. If you want to be an elite channel supporter, and I want to say thank you for everyone that supports my efforts as a content creator and a trader as well by joining and signing up for the private community, okay? All that is for $6.99 a month. Very inexpensive. That's all it is. You get the tons of videos where I break these trades down. So you get the trade breakdowns, the video playlist, and a great video that I covered on market structure for only $6. Oh, well, $6.99, $7 a month. Okay, for anyone that's interested. Okay, it has helped lots of people out. I will say that for sure. And you can also come over to the Discord and ask away, and people will tell you I'm probably the same, okay? But again, that link is down in the description portion of the video. The second link right under the Discord link is titled Elite Channel Supporter. Once you click on it, 2 tiers are going to pop up. Make sure to choose the second one for $6.99 so you gain access to the additional private community video content where I break the trades down, talking about stop loss placement, profit target, structure, why I took those trades, okay? I break it down for you, all right? Other than that, you also get the video playlist and the market structure video. That's it. I appreciate it for everyone taking the time to view today. If you're a first-time viewer, please take the time right now to go ahead and sub by clicking on the subscribe button, and make sure to turn your post notifications on so that you do not miss any of the uploaded content by clicking that bell as soon as you click the subscribe button. Last but not least, do me the biggest favor right now. If you found some value in today's video content, please do me the biggest favor and drop a like by clicking the thumbs up button. I greatly appreciate it, and I'll see everyone in the next video. Have a great weekend. Next week, we got a full week of trading, so take care. See you then.